Hello and welcome to KYC, your daily deep dive into the world of India's top companies, only on NDTV Profit. And in an ever-evolving stock market, information is plentiful, but clarity is hard to come by. KYC, know your company, is where change that every day, and we unpack a story, the strategy, as well as the fundamentals of one NSE-listed company every single episode, giving you the edge to invest with confidence. Today, we are talking about Bondada Engineering, which is in focus, and this is a relatively new listing. Of course, the debut has been made just this very year, in fact, in the last few months. And since then, we've also seen some staggering growth coming through for Bondada Engineering. Now, as the name suggests, that the company is in fact into engineering, procurement, and construction services. Also, looking at largely focus in telecom and solar. Now, it does produce and supply LED lights and building materials as well. So it does have a little bit of a diversification going on, and that's very evident in the kind of margin profiles that you will still see in just a bit. But for now, this is your overall revenue breakup with a majority of your revenue is coming in from the telecommunications space, followed by solar, and then a little bit towards products. That's where the bulk of your contribution to the revenues is coming through. That said, in every episode, what we try to do is we try to rate the company based on a handful of parameters. This would include something like the income statement, the balance sheet, cash flows, as well as return ratios. And, among the other set of parameters that we also talk about is, the order book, shareholding, street cred, as well as street coverage. So, and with that, on that note, also, let me get in my colleague Anushi, who's going to join us and shed more light on the company. And both Anushi and I will take you through the ratings of the company as to what we make of how its performance has been, as well as take you through some of the strengths, weaknesses, opportunities, and threats here. So, Anushi, thank you so much for joining in here. Let's start off with the income statement. How are you looking at things develop?
Well, thanks for that, Agam. So, since it's listing in September 23, we are seeing pretty strong numbers from Bondada Engineering that's reflected in its stock prices as well. Now, coming to the first metric, which is revenue, we are seeing FY24 revenue stood at about 801 crore. If you look at the last 3 years CAGR, this is at 41%. So a high CAGR growth that we've seen in the last couple of years. Even EBITDA stronger growth here as well. 62% is what we are seeing. 68 crore is their FY24 was their FY24 revenue. EBITDA margins, while they were in 9% of range in FY24, they've fluctuated between this 9 to 11% range in the last couple of quarters. Net profit also 46 crore of net profit in financial year 24, and this is with a 75% of a 3-year CAGR growth that we are seeing for the company. So pretty strong numbers on the income statement side, but Agam, let's walk through the balance sheet numbers as well.
Right. Anushi, given the fact that we've seen such strong numbers, and especially in terms of profitability, the balance sheet is in a relatively good place too. So if you consider the shareholders' equity, which includes accumulated profits over the course of the last few years, along with, of course, the equity, that stands at around 272 odd crores. So that's the net worth coming in. Its gross debt is not significantly large, given the fact that it's in an EPC company, and in fact, it's coming in at just about 115 crores. And of this, remember, the cash and bank balance still stands at around 69 odd crores. So the positive is that this debt is actually negligible, and certainly the overall debt to equity is at a very low ratio, considering the kind of equity that it has and the kind of net debt that the company has. So that's another thumbs up. So far, at least as far as the income statement and the state of its balance sheet are concerned, both on, pretty stable ground. But what about cash flows, Anushi?
Now, if you look at the cash flows from operations, we've seen a negative amount in this first half. As of September 23, that cash flow from operations stood at 53.3 crore. This is a negative number that we are looking at as compared to 54 crore in as of March end. Now, do note that this is a company where there are high working capital requirements. So this is one of the reasons as to why we are seeing this. So just to take this number as the standalone value would not be pertinent, but net cash flows, however, were 3.22 crore in first half of this year compared to 3.81 crore. So net cash flows have majorly remained in line. So this was aided by higher investing and financing cash flows as we speak. So this is the overall view on cash flows that we are looking.
So, well, obviously a neutral rating here because it's still half the year done, and perhaps you can get a better idea of your overall cash flow situation towards the end of this financial year. But I'm also going to talk about, the return ratio. So we've got the income statement, the balance sheet, and the cash flow statement out of the way. What does it mean in terms of certain operational metrics, profitability metrics? So if you consider the return on equity for FY24, that stands at a pretty stable 27%. Now remember, the benchmark that we are working with is around 20%, and that's what the street also works with. So anything over the number of 20%, certainly a thumbs up. And it's the same for capital employed. In fact, that is an even better number because that stands around 36%. So given the fact that you have such strength as far as your ROCE and your ROE is concerned, again, well, I would give it a thumbs up. So far the company has been doing pretty well. What's also a big positive is the visibility for the company. So Anushi, what can you tell us about the order book here?
Agam, very strong order book that we are looking at. Their order book stood at about 5,342 crore, and this was as of October 24 figures that I'm giving. So just comparing it from the FY24 levels, FY24 they had closed with an order book of around 1,759 crore. So to see this number reaching to this 5,000 crore plus number, seeing a 3x growth in this. So even taking their last year's FY24 revenue into perspective, which was around 801 crore, a significant book-to-bill ratio that we are seeing, and this is expected to get delivered in next 18 to 24 months. So a lot depends on the execution of these orders, which will reflect a higher revenue growth for the company. So a strong order book is what we are seeing for Bondada Engineering.
Absolutely. And at least as far as the visibility is concerned, the company is sorted there as well. Now let's talk about whether or not the company actually shares a rather wholesome scarcity premium. At this point in time, it looks like not really. So firstly, remember that this is a 7,000 crore market cap company, and in terms of its shareholding, what we are watching out for is 63% held by promoters, as you can see, and that hasn't changed over the past couple of quarters. FII holding has gone up by just a tad bit, but again, your overall holding for FIs is not significant. And when it comes to maybe some of the others, that particular holding stands at well over 35%, which also means that the float for this particular company is well over a third. And because of that, while we could perhaps give you, it's going to be a mix somewhere between a neutral rating and a thumbs up rating. But the fact that, this is a new company and we're just waiting for how things could potentially pan out, we're going to give it a benefit of the doubt and going to give it a thumbs up. So that's as far as shareholding is concerned. But not done too badly, Anushi, since its listing.
Absolutely not. In fact, the investors holding in this company since their IPO times would be having a field day with just this one stock itself. It's gone up over 19 times since its listing in September 23. So what used to be around, even if you just look at the beginning of this year, the stock was trading in the range of 85, 90 odd rupees. To see the company from that value to this is just staggering. This is reflected by the kind of financial performance, the metrics that we've discussed, so strong numbers coming in from there. Do remember that since this is a newly listed company, there's no street coverage available on this as we speak. So this was the overall build-up that we are seeing on the street performance, Agam, as we speak. And dividend yield also, if you look at, that was about 0.02% for the company. Of course, this is a high growth company. It's still in the beginning of its phases with the kind of order book it has, with the kind of working capital it requires. So this is what is happening in terms of street cred.
Right, point taken. And again, we must remember that this is, as Anushi's mentioned, it's a company which is continuing to invest in the growth that he is looking forward to, and considering it is also looking at expansion in several other areas, is a potential reason why the dividend yield is not very high. Of course, it's also a newly listed company, so you never know that this dividend yield may just improve over the next few quarters, considering its profitability profile is, it's pretty stable. Of course, in terms of street coverage, there isn't as much And it's also a relatively smaller company in terms of market capitalization. So it would probably fall in the small cap universe at the moment in the classification of things. So if you consider the overall ratings at the moment with all the factors that we've spoken about, as you can see, it's a thumbs up for income statement and balance sheet, along with something like a return ratios, cash flows remain neutral. And among the other factors that we are considering, well, we have the order book, shareholding, street cred as a thumbs up, and street coverage would probably be, a neutral. And on account of all these, I'm assigning about a 0.5 point for neutral, which takes the total score for the company, the total rating of the company at a whopping 7 out of 8. So not bad, at least as far as it's will show so far is concerned. But the question really is that where do its strengths, weaknesses, opportunities and threats lie at the moment then? And with that, Anushi, let's talk about the company's strengths and weaknesses.
Now, if you are to look at the strengths, first is the strong order book position. We've already emphasized on that the company has over a 5,000 crore of an order book value currently, which is to be executed in 18 to 24 months itself. So a high book to bill ratio that we're looking at. In fact, if you look at the tenders also, they've submitted over 5,975 crore worth of tenders, with tenders in pipeline of about 2,437 crore. So this remains as a very strong point for the business. Along with that, what is another focus point for the business is its long-term contracts in both its telecom and solar projects, which are its main two business verticals. Even if you look at as of FY23, if you look at how they were positioned with their customers, about 90% of their revenue comes from customers with more than 3 years of relationship. So this is another point we should be considering. But coming to the weaknesses of the business, they are also dependent on a limited number of customers. So any kind of deterioration in the relationships with any of these customers would be a point which could be a pain point for the business. Other than that, as we've seen in this year's cash flows, it was a negative cash flow operating number that we had seen, as the business requires high working capital for the kind of orders it has. So sizable amount of working capital for the continued operation and growth. While it could be a positive also, it could be a negative, impacting the cash flow growth of the company as well. So these are the strengths and the weaknesses that we are seeing. But huge opportunities, Agam, especially when they're talking about that railway space.
Yes, Anushi, actually very interestingly, because, if you're considering railways, if you're considering something like green hydrogen, BESS, along with something, especially in the renewable portfolio, now we do know that all these areas are high growth areas, something that's been picking up over the past 3 to 5 years. And it does seem like it's still at just about done with its nascency, and it could potentially see a lot of tailwinds in terms of growth, and which is why these are some of the potential opportunities for the company moving forward. It's looking to expand footprints in the international markets as well, in telecommunications and the renewable energy space. So that certainly could be the other area of opportunity. In terms of threats, what we are watching out for is, dependency on EPC and O&M contracts. And, to be honest, this is just the core of the business. So I wouldn't exactly, call it a threat, but perhaps to a certain extent, the threat here is the subject to cancellations. And that perhaps is the problem with all the companies in the sector. And the other one would be, intense competition. Well, we do know that a lot of its peers, a lot of its relatively larger peers have a significantly higher exposure to the many sectors that it already operates in. So the competition could always be a little bit of would always be a little bit of a problem, or would be a challenge in that case. So that's something that we're going to keep an eye on as well, as far as Bondada Engineering is concerned. Anushi, on that note, thank you so much for joining us and taking us through those insights into Bondada Engineering. What we must remember is that at the moment, given the fact that it's shown you a good amount of traction towards the positive end on the various factors that we spoke about, the question really is that how much of it can be sustained. And it does seem like, with the kind of visibility that we're seeing, the kind of order flow that the company has, as well as the plans on the annual, when it comes to not only the renewable space and the telecommunication space, but also its plans to diversify in many of the up-and-coming growth areas, is something that could very well play in favor of Bondada Engineering. On that note, let's shift focus and listen into the management itself. And we in fact caught up with Raghavendra Bondada as well as Satyanarayan Bharatran of Bondada Engineering. And here's what they had to say about the company's growth prospects going forward as well as the strategy. Listen in.
Yeah, yes, Anushi, we are basically in EPC segment and O&M services in both telecom, EPC and solar EPC, that is renewable energy. The company is progressing in both these segments. Both are very much required for the country. One is Digital Bharat, the second one is the renewable energy mission. And we have been there in this telecom business past 28 years, actually including my previous experience. But this company is formed in 2012, and thereafter we ventured into the solar EPC in 2017 onwards. We have been working on good sizable orders. Going forward, we have very good order book is there for next 3 years. Right now we are having confirmed order book of around 5,300 crores plus orders, and it's a huge amount of solar EPC works are there. As you all know that a lot of renewable energy is to be deployed in the country. Both in solar, wind, even pumped hydrogen, green hydrogen, even pumped storage, battery energy storage systems. A lot of technologies are emerging into the market. So a lot of renewable space is there. We are looking very bright future for next 3 years as well as next 5 years. We have the business plan available. And next 10 years, I am seeing that spectacular growth is going to happen in both these segments, telecom and renewable energy space.
Mr. Bondada, you mentioned that telecom and solar is your core business trends, higher segments that we are looking at. In fact, if you look at this H1's trajectory, also 63% of growth that you've clocked in, even in FY24, 100% plus growth. Want to understand in these segments what is leading to this kind of an upside that we are looking in growth, and is this expected to sustain for the next 1 to 2 years also if we speak? So I want to understand the revenue growth picture for FY25 along with FY26, if you can give a perspective on that.
Yeah, yes, last 12 years our growth has been the 53% CAGR 53%, and similar growth we are expecting. In fact, actually this year onwards we are going to make it double. Actually, the 100% growth is there. Last year we had done around 800 crores revenue. Even future next 3 years we are going to make it double year on year, because actually we have the confirmed order book which we have to deliver in next 2 to 2.5 years. We have the sufficient order book to make it happen, to make it a double of revenues in year on year for next 3 years.
That's quite a
in
solid.
both telecom EPC and as well as the solar EPC.
Yes, surely that's quite a solid trajectory that we are looking at. In fact, you've mentioned about the order book. Let's get perspective on that. So in the last 6 months itself, we've seen a 3x jump in your order books that stand at about 5,342 crore. In the last 6 months, I want to understand in this first half particularly what has led to the surge in orders that we are looking at, because if you look at the FY24 number, the number was in between 1,300 mark. So what has led to this growth in orders that we are looking at, and if you can give us a perspective on the breakdown of your order book and the order inflows expected over next half?
Yes, as I mentioned, both these segments, solar, renewable energy EPC and as well as the telecom EPC, the bright future is there. So a lot of tenders are being floated across the companies and across government organizations, even private organizations. A lot of tendering process is happening. So last 6 months, we have been got into the public sector companies, participating in public sector companies tenders, because we have acquired a lot of credentials to participate in central government and public sector companies. That's the reason last 6 years we have participated, we have secured good amount of order book, and similar growth is going to happen. And my order book is going to be almost around 8,500 crores to 9,000 crores by March 2025, after reporting the March 25 numbers. As you already mentioned, that projected number of around 1,500 crore of March 25.
Okay, so 5,000 figure moving to 9,000 figure as we speak. How much do you plan to execute in the next half of this order book? If you can give us a picture on what usually is the execution period of this orders that you've received.
Yeah, all these orders, whatever is confirmed orders are there as of now, that 5,300 crores. Out of that, actually around 1,200 crores is our O&M, which is running into another 3 years to the 5 years time. But rest of 4,000 crores order, which we have to complete in next 18 months to 22 months time, that we have to complete it.
All right, Mr. Bondada, one interesting thing about your mix, if you look at the revenue mix, now order book 75% is solar, but in the revenue composition, it is telecom, which is the leading one with about 59% of mix. So going forward, with a 100% increase that you expect in the revenues forward, what is the kind of revenue mix also? Is solar going to be the focal point now, or is it on telecom? If you can help us with the breakup between the segments expected.
Yeah, solar is going to be the major contributor for going forward, but I think as of now, whatever numbers, I think you must have those numbers. But going forward, telecom is going to be around 30 to 35%, and solar EPC is going to be around 70 to 75% going forward numbers.
All right, so that is the outlook on the mix that you've given. Another vertical which you plan to expand on is the railway sector, and the plan is to make it as big as other verticals. I want to understand the rationale behind expanding in the railway space, and what is the kind of contribution that you're looking from this area?
Yeah. In addition to this telecom and solar EPC, these are both are growth segments, and even Indian Railways is also coming up with huge budgets on their safety projects. The safety projects means the Kavach, and as well as the barricading of those high-speed trains, semi-speed, high-speed, and then Vande Bharat trains by crash barriers. So these two activities we are qualified because of with our past credentials, past experience. Right now we are participating in even in Indian Railways tenders, that is of passive infrastructure services to as a EPC, passive infrastructure services to this Kavach projects. Government of India has given budget of almost around more than 30,000 crores to be deployed in next 3 to 4 years. So we are easily qualified for these kind of tenders. So we are participating even in railways. Now we already identified around 7 tenders. We have participated in 3 tenders. And this is going to be another vertical, because railways are going to build their own private network for their LTE network, which is required for Kavach implementation. We are well qualified, well positioned to execute these kind of projects. We are well qualified. So even railways are also, we are looking at railways. Our railway segment is going to be a big vertical, as big as our telecom vertical. Maybe down the line, next 2 to 3 years, we might be growing maybe around 2,500 crores of vertical, railways vertical.
Well, that's interesting. 2,000 to 2,500 crores from the railway vertical. That's what you expect. Mr. Bondada, final question to you, a brief one. I want to understand your capex plans. Also, there have been some board approval on the 500 crore of fundraise. Is it for that? Are we looking at? If you can just give a perspective on that in brief.
Yeah, we have intimated to the stock exchange up to 500 crores, but thereafter we have made a lot of internal discussions. Now we are looking at anything between 250 to 300 crores through pref preferential allotment that is going on. I think next 2 to 3 days we are going to close that preferential allotment. Rest, our working capital requirement at this point of time is around 450 crores. So 300 crores we are going to pull from this preferential allotment, and then 150 crores we are going to make it from our debt route. So with this 450 crores of working capital requirement, I think we can easily execute our projects well within the timelines. And our prime motto is to execute projects on time. That's what actually we have been striving for it. And none of the project is delayed because of our reasons so far. So we have secured the good amount of order book, and people are there on ground to execute. And now we are in verge of pulling the funds so that actually we can execute these projects well within their time.
Right, that's the management telling us about all the plans on the anvil for Bondada Engineering going forward, being in growth sectors. And just to reiterate, their order book at the moment. Now, as Anushi was mentioning earlier, the order book as on October 2024 stood a little over 5,300 crores. Do also remember that its annual revenue of the company stands at around 800 odd crores, which means that at the moment, it has a significantly large order book, nearly 6 to 7 times its annual revenues for FY24. And that basically gives you a good amount of visibility. Not to mention that over the course of the next 2 quarters, these 2 quarters tend to seasonally be the ones which have a relatively larger awarding activity coming through, especially the last quarter of this financial year. That's the January through March period, where you will have a lot more awarding for the entire sector. And that's the potential reason why you're seeing such strength in the company going forward. But on that note, it's a wrap on this edition of KYC, but lots more lined up on the other side. Stay tuned to NDTV Profit.